The Federal Reserve System consists of three main entities that perform key functions that serve the public and promote the health of our economy and the stability of our financial system. These key entities are the Federal Reserve Board of Governors, 12 Federal Reserve banks operating around our nation, and the Federal Open Market Committee. Based in Washington, D.C., the Board of Governors is the governing body of the Federal Reserve System. It's an agency of the federal government that reports to and is directly accountable to Congress. The board consists of 7 members, or governors.
还有几分钟。 还有几分钟就还有几分钟就有了。嗯，看看重要的事情是啥啊？这一次 FOMC 呢，市场上就大家已经预期说是要降息25个基点了。这个呢是我觉得应该也是会被执行的，因为如果他现在不降息的话，那他的处境就是说他就没有按照他的那个指引走了。一般来说，如果他不按照指引走呢，这个鲍威尔这个一般会提前通过这个 NIC 来发声的，不会说是突然就这么做。所以依我看呢，他这一次没有发出任何声音，我认为还是会跟着指引走的。而且说实话，这个就业嘛，我也没觉得很厉害什么的，所以说，嗯，我觉得这个应该是会跟着这个应该是会跟着走的，所以说，嗯，还有2分钟，所以说，当然重点是他说什么啊，不是他这个就降息一次就完了的，重点是他说什么话，嗯，到时候之后等一下我看群会看的很少，因为我这边手上还有其他事情要一起做。他应该不会，重点是他一会儿说话说什么。当然，如果说话说的也好听的话，那我觉得，那我们就3个Q 来一个梦想，或者说是来一个，对吧？来一个超，对吧？不要是低了，来一个超。3Q 有没有给机会啊？3Q 不但没有给机会，还给了我们后悔。不过 Riot 应该还是不错的啊，Riot 挺香的，可惜了没有梦想超的。好了，应该是会降的，我认为是会降的啊。好的，符合预期。好的，符合预期，朋友们，符合预期。那么既然如此的话，那重点就是，嗯，他说表示这个符合预期的降25个基点。那么美联储表示，现在面临的风险仍然是大致的平衡啊，就是说是就业和通胀是平衡的，并没有倾向于哪一侧。他对就业市场的表示是总体上有所缓和，换句话说，他不觉得就业市场有那么的差，看上去，嗯，看上去就是说上一次的飓风他们也是这么认为的，那这一次呢，全票通过，完全同意啊。嗯，上海峰啊，这位朋友，你说跟我说上3倍，我的天啊，上什么3倍啊？我要能上对吧？我的有30英寸，我的杆子有30英寸长，你告诉我用个3英寸长的，这不是有毛病吗？对吧？当然，美联储这边表示缩表也是没有任何变化。有些人在想，就是说他可能要不缩了，因为那个逆回购要见底了。但实际上，实际上我并没有感觉到，有什么，有什么大不了的，呃，就是没觉得啊。那么这么看上去，嗯， 当然，这个有没有什么动静？有没有什么动静啊？啊，辅音达文西呀。哦，这有一个挺有意思的东西。这一次啊，美联储他们把它省略掉了一句话，它没有提通胀可持续向2%的信心有所增强这句话，它的信心有所下降啊，这句话有意思啊，他把这个给省略掉了。换句话说，它可能就是通胀的变数要稍微更多一点啊。他也确实说有进展，不过呢，信心并没有较上一次增强，我认为这是合理的，信心有所下降，这是合理的。这个算是，这一次是全票一致通过。那全票一致通过呢，就代表这个他们对于25是没有任何的这个表示，就说是反对吧？你虽然说很一致，但这一次真的就是没有提及到什么东西啊。我看看大家是怎么反应的，大家可能有点兑现的感觉啊，大家有点兑现的感觉。但说实话，那句话你说是不是有点不太好呢？确实有点不太好啊。他没有就是说他并没有说，哎呀，并没有说我们很认为这个通胀要2%，这句话没有，这句话省掉了，这有点让人不太愉快啊。我们更希望他说这句话，不过多的话就没有说了，真的是这一次确确实实跟预期也差不了太多，就是就是尽量就是没说啥都没说，说实话。当然稍微省掉了一点，这算不算是有一点点阴呢？可能稍微有一点点吧。对，话是这么说，有人说这个2%已经遥不可及了，通胀，但话是这么说，嗯，但是在美联储宣布说我们要冲着2.5去做通胀这句话之前，他先要把它打到2去，因为这关乎到他的信誉，这关乎到他作为这个央行界老大，这个压通胀，这个欧美世界能不能压下通胀这一点，呃，是有这个，对吧？他不能还没压下去，他就已经说，我这边觉得2%好像到不了了，然后先压下去才能说，你猜怎么着？我虽然压到2%，但我觉得这个2%不可持续，我要把它这个后续要再提回来，这才是应该有的。无论如何呢，这一次我确实没有看到过什么。来，让我们听一听其他人士的分析，英格里希的，我给大家翻译。说实话，呃，我想这个可能，我想这个债券这个债这方面可能是觉得，如果能够在美联储能够给出一个12月还会继续降息的说法，可能会更高兴一些。 不过呢，我觉得12月还是会降的。不过点阵图啊，关于明年的节奏应该要调整了，不会说是像之前预计的那么狠的降了。之前预计的实在是，不，之前预计的太过分了，好吧？市场的预期也没有发生改变，仍然是认为25在12月还是会有的。对吧？这就是一个 uneventful，这就是 uneventful 啊。没有任何的就是有意思的东西出来，更多的就是预期完全预期了嘛，降了呀降了呀，朋友，降了，但是纯粹符合预期的一个东西，所以重点还是要看等一会儿呢这个鲍威尔爷爷说什么。不过呢，这个鲍威尔爷爷的讲话呢，要在这个20分钟之后才会有。那我们先看一看，哦，刚才好像，哦，哇哦，真是一点机会，3个Q 真是一点机会都不给啊！降了多少？25啊，预期之内，完完全全预期之内，没有任何意思，对吧？更多的这一次降没有感觉到，没有，就是说是没有任何，就是说有太有值得去评论的东西吧，都没有啥值得评论的东西，真的。嗯，让我们在 X 上看看有没有就是说法啊，朋友们，让我们在 X 上看看有没有什么说法，然后我给你们看看。嗯，interesting shift. I think hawkish also is cool. OK，可能有人觉得稍微有一点点阴吧，对吧？对于通胀的展望，稍微有点点阴。我觉得他这个措辞其实还没有什么大不了的。嗯，你就是说你从他的措辞中说，措辞你从他这个书面措辞上来说，没有什么，你可能有一点点阴，但是说实话，这个不重要，重点的还是这个明天，不是明天，是接下来他讲话讲什么。我就怕他讲话呢是他这个措辞的延伸，你猜怎么着？他这个措辞虽然是有一点点阴，但是他讲起话来可以是非常阴，对吧？下一次是12月，拜托，什么叫全线起飞啊？上一次降了50以后有全线起飞吗？对吧？你看看10月是怎么样的，朋友？10月并没有全线起飞，好吧？咦，这怎么把它弄掉？我也不觉得，就是说有人说稍微可能有点点阴，就要这个砍一半安心过周末。说实话，如果说这样才能让你安心的话，你也可以，但我觉得没必要啊。我觉得下周1、2应该都是不错的，说实话。嗯，有人说上一次起飞了一周，然后就全回去了。事实上你看看一些后面的东西，后排啊这些东西都不行，只是前排使劲往上顶而已。所以说，上一次其实不算没有流动性的这个释放吧，更多的是就是前排使劲在顶。好了，接下来还是听别人就是看他讲话说什么了。嗯，你这个问题问的很有意思啊，你怎么在问鸿蒙啊？如果他阴的话，对我们来说是个压力啊，我先告诉你。 这对我们来说是个压力。你希望它不要赢，这是真的。要不然人民币压力大的话，不，这实际上是不太好的，对我们来说，你这个心爱的鸿蒙大概也不会有好处。明天不结，什么明天结束啊？明天不结束，周五才结束，好吧？明天就周五，哈哈哈哈。哦，对啊，今天是周四了，就是不是周四，这一次中，这一次是这个因为这个原因嘛，推了一天，提前兑现。明天不要说有没有波动了，明天是非常强劲的一天，我跟你讲，明天非常的强劲。有人在说杭三会不会好一点？我杭三会不会好一点？嗯，我觉得有可能会好一些吧，有可能。你就看他接下来讲话怎么讲。接下来讲话要是很阴的那种的话，行商也会很难受的。你看，到时候人民币就是 RMB 就充满了压力，但实际上就很有压力。那如果接下来讲话不那么的话，那我们事实上都可以啊。我跟你讲，都可以行商一点。但我还是想看看铜的数据啊。但说实话，我确实觉得可以行商一点了，对吧？我觉得没啥问题。但我会看铜啊，我还看了 copper，我才会正式的就是决定要不要 FXI 了。我不会，嗯，伤害过太多次了，已经不会在这个，已经不会在这个就这么就上了。居然还有连线啊！看这个连线应该是连线错了啊，这都没人吗？不知道超哥在不在啊？超哥在不在？嗯，我问问超哥在不在。他们明天早上还要干，他明天早上还要到嘛，对吧？所以他们应该可能就不在了。说实话，确实是这个怎么说呢？如果今天不是他讲话讲些乱讲一些比较阴的话，那其实今天这个确实是你不看都无所谓，这是真的，也算是预期之内吧，对吧？有我盯着就行了，估计阿帅不用看也行，那时候没有太多的让人惊讶的点。这一次和上一次真的就是他那个文字啊，都是没什么非常有意思的东西。我看到一个很有意思的图。嗯，哇哇哇哇哇哇，这个 Riot 似乎是不太够，没有胆子够大，有点糟糕。哎呀，这个 XBI 怎么回事哦？我的妈呀！下一次是什么时候？我查查啊，下一次是十二月多少号呢？有好的方向吗？说说看法。后排，只要他不太乱讲话啊，接下来后排，对吧？你看什么 coin 我们都不去说，不去 coin 都觉得好像就那样了，都要跑到 Riot 上去了，对不对？coin都这个不去，本来可以 coin 的，但我们都 Riot 了，你就知道了。我们在往很后面的东西切，真的是今天应该胆子大啊！你说的那个，你说那玩意儿是那个 FT，哇哦，这怎么回事哦？怎么没有人告诉我 FT 这个东西呢？哇塞，FT 这么忙， 呃，有人对 XPEV 的叫 XPEV，哇 XPEV 怎么回事哦？哇塞，Neo 也该不会 Neo 真那么烂，哈哈哈，还好没有去，对吧？还好上一次弄的 Neo 的，那 Neo 昨天已经跑路了，我提醒大家一下，还好上一次弄的 Neo。还有13分钟，不过到现在其实都没有看到什么有意思的东西，没有什么，也没有波动，感觉现在也没有波动可言，大家都知道这个稿子上一点东西没有，还是要看看字儿，还是要看他讲话。FT 啊，对，要不要干干 FT？那个 Copper 的数据下去以后，我们就可以干 FT，而且FXI 也可以。就说有人说小鹏它新的汽车发布了，价格很香，这样子是吧？卷嘛，让他们卷嘛。对，这些人这样车要把自己卷死，没关系。等这个不好的时候，我们再来挑这些垃圾电车来，你知道 short 一把。哎，其实你说现在又下来了，比如说你看这个著名的这个烧饼又下来了，3个Q 也下，又是3个Q，哇，3个Q 好猛啊！不过这个道它也是荡了哈。FT 确实疯了，FT 的话没有考虑过那个，我都没考虑过。好了，这就是美联储音乐，朋友们。如果你没有看过这个的话，你们就会知道，他每次都放这个音乐的。这样切一个画面。准备，还有10分钟，朋友们，都说了 P2P 不是，你要知道这边会有这个狠狠的东西出来的话，对吧？我们这个开会嘛，这狠狠的东西出来，你不要就不要想着去了更大胆的东西去了，比如说这个别人说的 FT 嘛，你发展 FT 不好玩，要搞 FT，只能 A 明天什么A 我实在是不知道说啥，要不一个 Q 一个 C，一个 Q 一个 C，你知道 SPI 是有 QD 的吗？SPI 可是有 QD 的，有点大了，说实话。我觉得你只能 A 这个 FT 是什么？大家给它打一打 FT。因为这个 FT 呢拼出来的呢，它跟这个，它的就是名字，我就觉得可能就要有点说出来有点啥，是吧？哎，这个烧饼又下去了，那我们的 Riot 呢？我们最喜欢的 Riot 依旧坚挺。看看这个 IREN 也显然不如我的 Riot，赢了，赢麻了。哇，PR 特别牛逼啊，point 也不太好。这个不得不说，这个罗素先生今天有点过。龙头老大，你知道吗？一定要去，就是说，你看，对吧？为什么不审萨克斯？为什么不如直接老大？为什么？因为老大才是最好的，对吧？拖的老二什么的东西，你看看 AI 界的老二是什么状态 ？AI 界老三就不说了，趴地板上是吧？老大，知道吗？ 有个朋友说我们起来的这么早，是不是要考虑？对，是的，我们起来这么早就是在因为我想3个Q，因为我想这个杆子3个Q，所以我在想，如果因为在这个场景之下，就是说这个他讲话这个时间段呢，这种时候呢，经常会有时间上下的这种情况。在这个大幅上下的时候，我们就可以3个Q一点，虽然这个3个Q还不如直接是吧10点半就3个Q完了。我很想搞点3个Q，而且3个Q的话应该会比较狠，不会是什么低，至少是标，我认为应该是超，我认为3个Q是可以超的，就是按梦想超的会就是直接超的。然后呢，3个Q这个，哇哦，这个3个Q算是星辰大海，有星辰大海的感觉。有3个Q这么飞在天上，我也有点担心。参考一下之前为什么没炮要搞错，我哪知道炮搞不搞分，炮可能搞错，我不觉得他想搞啊，因为他搞很那怪啊，还是他搞错了。没说什么，没讲话。没说什么，那个人事长没说啥东西啊。这么晚都有30来个人啊，朋友们。还没开讲呢，还有5分钟我才讲。先是给你个文字，给你个大的稿子看了以后，具体细节我们提问也都是在接下来的这个5分钟后，接下来这个就是3分钟的话，这也是真正的开始，这就现在其实，预热一下，我都想搞3Q 了。有人说，说实话，你提那个 Meta 还有绝对老大，其实3Q 不就是他们吗？3Q 不就是，还是说你想加点没必要加直接3Q 就行了，3Q 才不呢，有人说3Q 有点昂贵，但是不正确的啊，3Q 是不昂贵的，你别搞错了，3Q 其实相对来说它的波是小的，所以昂贵的原因可能是因为它的那个基础价price 有点略高，不过比如说我们看看3Q 明年3Q 明年3.6吧，明年6 3Q 明年6明年6的话怎么办？3Q 明年653确实有点，那你就可以把它变得，比如说你就453、55怎么样？55是有点过分了，55也可以啊。我喜欢6月，然后我们再看一下，比如说54或者545，这都是不错的。有人说这个音现在好像是很好的样子哦，我看看。 我今天是怎么回事情？有点兴奋的样子。连线，大帅连线，大帅应该连不了线，大帅可能根本就起来了，他实在是太懒了。好了，快了，还有2分钟就要出来了。我看一下啊，有各种各样的这个高盛仍然在预计接下来会有这个25个基点的升息，在10月、12月，我也认为会有吧。但是就未来明年来说，应该是会更加渐进的，不能说是3个 Q 里面还有电车老大，不好吧？我觉得 Team 来了，等等 Team 来了，这你敢Team 来了，Team 来了就是大帅是吧？大帅还是起来了。等。China 金融这么这么强劲啊！哇，真的是已经提前开始了。我是不是有点不行？我坚定的要看 Copper 的，我坚定要看 Copper， 坚定要看 Copper。我不介意这个错失金融，不过，不知道我对于这个我们的资产，我们的这个东西还是有点敬畏感的，还是。Riot 有点。我在纠结明天要不要让我出明天 A。来了，爷爷鲍威尔爷爷来了。好了，专心听讲。
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. The economy is strong overall and has made significant progress toward our goals over the past 2 years. The labor market has cooled from its formerly overheated state and remains solid. Inflation has eased substantially from a peak of 7% to 2.1% as of September. We are committed to maintaining our economy's strength by supporting maximum employment and returning inflation to our 2% goal. Today, the FOMC decided to take another step in reducing the degree of policy restraint by lowering our policy interest rate by a 0.25 percentage point. We continue to be confident that with an appropriate recalibration of our policy stance, strength in the economy and the labor market can be maintained, with inflation moving sustainably down to 2%. We also decided to continue to reduce our securities holdings. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has continued to expand at a solid pace. GDP rose at an annual rate of 2.8% in the third quarter, about the same pace as in the second quarter. Growth of consumer spending has remained resilient, and investment in equipment and intangibles has strengthened. In contrast, activity in the housing sector has been weak. Overall, improving supply conditions have supported the strong performance of the U.S. economy over the past year. In the labor market, conditions remain solid. Payroll job gains have slowed from earlier in the year, averaging
104,000
104,000 per month over the past 3 months. This figure would have been somewhat higher were it not for the effects of labor strikes and hurricanes on employment in October. Regarding the hurricanes, let me extend our sympathies to all the families, businesses, and communities who have been harmed by these devastating storms. The unemployment rate is notably higher than it was a year ago, but it has edged down over the past 3 months and remains low at 4.1% in October. Nominal wage growth has eased over the past year, and the jobs to workers gap has narrowed. Overall, a broad set of indicators suggests that conditions in the labor market are now less tight than just before the pandemic in 2019. The labor market is not a source of significant inflationary pressures. Inflation has eased significantly over the past 2 years. Total PCE prices rose 2.1% over the 12 months ending in September, excluding the volatile food and energy categories. Core PCE prices rose 2.7%. Overall, inflation has moved much closer to our 2% longer run goal, but core inflation remains somewhat elevated. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. We see the risks to achieving our employment and inflation goals as being roughly in balance, and we're attentive to the risks to both sides of our mandate. At today's meeting, the committee decided to lower the target range for the federal funds rate by a quarter percentage point to 4.5% to 4.75%. This further recalibration of our policy stance will help maintain the strength of the economy and the labor market and will continue to enable further progress on inflation as we move toward a more neutral stance over time. We know that reducing policy restraint too quickly could hinder progress on inflation. At the same time, reducing policy restraint too slowly could unduly weaken economic activity and employment. In considering additional adjustments to the target range for the federal funds rate, the committee will carefully assess incoming data, the evolving outlook, and the balance of risks. We are not on any preset course. We will continue to make our decisions meeting by meeting. As the economy evolves, monetary policy will adjust in order to best promote our maximum employment and price stability goals. If the economy remains strong and inflation is not sustainably moving toward 2%, we can dial back policy restraint more slowly. If the labor market were to weaken unexpectedly or inflation were to fall more quickly than anticipated, we can move more quickly. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. The Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to our discussion.
Thank you. Given the expectation that the election outcome will produce policies that would meaningfully impact the U.S. economy next year, how is the committee taking these proposals into account for upcoming decisions, including potentially the next one in December? And can you give us any more sense of how proactive or reactive the Fed is prepared to be to changes in economic policies with the next administration?
Sure. So let me say that in the near term, the election will have no effects on our policy decisions. As you know, many things affect the economy, and anyone who writes down forecasts in their job will tell you that the economy is quite difficult to forecast looking out past the very near term. Here, we don't know what the timing and substance of any policy changes will be. We therefore don't know what the effects on the economy would be, specifically whether and to what extent those policies would matter for the achievement of our goal variables, maximum employment and price stability. We don't guess, we don't speculate, and we don't assume. Now, just in principle, it's possible that any administration's policies or policies put in place by Congress could have economic effects that over time that would matter for our pursuit of our dual mandate goals. So we, along with countless other factors, forecasts of those economic effects would be included in our models of the economy and would be taken into account through that channel.
Nick.
我觉得他这句话说出来，其实基本上你可以上了。
Chair Powell, Nick Timrose from the Wall Street Journal. Roughly 1 year ago, when the 10-year Treasury was flirting with 5% and 30-year mortgage rates were near 8%, you noted how higher borrowing costs, if they were sustained, could weigh on economic activity. Given that you've said you believe policy is restrictive and the Fed is now dialing back that restriction, are the growth risks presented by higher U.S. Treasury yields today any different from those you identified 1 year ago when inflation was still meaningfully above your target?
So I would just say this: we've watched the run up in bond rates, and it's nowhere near where it was, of course, a year ago. I guess the long run rates are well below that level. So we're watching that. Things have been moving around, and we'll see where they settle. I think it's too early to really say where they settle. Ultimately, I'm sure we've all read these decompositions of what, and I certainly have, but it's not really our job to provide our specific decomposition. I will say, though, that it appears that the moves are not principally about higher inflation expectations. They're really about a sense of more likelihood of stronger growth and perhaps less in the way of downside risks. So that's what they're about. We do take financial conditions into account if they're persistent and if they're material. Then we'll certainly take them into account in our policy. But I would say we're not at that stage right now. It's just something that we're watching. And again, these things don't really have mainly to do with Fed policy, but to do with other factors in the economy.
If I could follow up, is the September SEP, are those rate projections still valid? Do they still seem relevant given where we are now? You get halfway through the cycle between the last set and the next set. I wouldn't want to comment one way or the other. Let's talk about the data we've gotten since the last meeting. So in the main, the economic activity data have been stronger than expected. The NIPA revision was stronger. Certainly the September employment report was stronger. The October report, not stronger. Retail sales stronger. So overall, though, I think you take away a sense of some of the downside risks to economic activity having been diminished with the NIPA revisions in particular. And so overall feeling good about economic activity. So I think we would factor that in. At the same time, we got one inflation report, which it wasn't terrible, but it was a little higher than expected. So I think really the question is December, and by December we'll have more data. I guess one more employment report, two more inflation reports, and lots of other data, and we'll make a decision as we get to December.
Gina Smilik from the New York Times. Thanks for taking our questions, Chair Powell. When it comes to December, what will you be looking at specifically as you try to make that decision? And then as of the Fed's economic projections in September, you had written down 4 quarter-point interest rate cuts in 2025. Do you still think that those are likely? Is that sort of the baseline outlook at this point, or has that shifted? And if it shifted at all, can you give a little bit of detail as to why?
We don't fill out an SEP, and I can't characterize one that wasn't filled out today. So I can't really speak for kind of exactly where the committee is. I will just say for December, we're going to be, again, at every meeting, we're going to be looking at the incoming data and how that affects the outlook. As you know, we're in the process of recalibrating from a fairly restrictive level at 5.33%. After today's move, we're down 75 basis points. And we're asking ourselves, is that where we need to be? That we're trying to steer between the risk of moving too quickly and perhaps undermining our progress on inflation, or moving too slowly and allowing the labor market to weaken too much. We're trying to be on a middle path. where we can maintain the strength in the labor market while also enabling further progress on inflation. We think that's where we are, but that's the question we're going to be asking in September and in other meetings. And again, I can't really update you on the committee's thinking because we don't fill out an SEP at this meeting.
Yeah, totally appreciate that. I guess when it comes to your own thinking, do you think that a full percentage point of rate cuts in 2025 is a reasonable outlook?
Again, I'm going to wait. We're going to wait and see how things come in December. I mean, it's just. I would put it this way: we're on a path to a more neutral stance, and that's very much what we're on. That has not changed at all since September, we're just going to have to see where the data lead us. We have, a whole 6 weeks of data to look at to make that decision in December. Obviously, I'm not ruling it out or in, but I would say, I would say that, again, we didn't update the SEP, so I'm not going to characterize, where the committee would be.
我觉得没什么大不了的，没什么大不了的。
Thanks, Howard Schneider with Reuters. I wondered if you could please elaborate, explain a little bit the two changes in the language of the statement here. In the first paragraph, when you say inflation has made progress, dropping the word further progress. And in the second paragraph, dropping the sentence that the committee had gained greater confidence that inflation was progressing towards its 2% goal. Is there any policy substance behind either of those changes in language? Is it meant to open the door to a December pause? Is it meant to communicate anything about the stickiness of core inflation in the last 3 months?
Not really, no. So let me tell you what we were thinking. So the test of gaining further confidence was our test for the first rate cut, right? And so we met that test in September, and therefore we take that test out. If you leave it in, then it's new forward guidance. It's brand new forward guidance. What do you mean by it? Are you requiring yet further? We have to say yes or no at every meeting whether we've made further progress. The point is we have gained confidence that we're on a sustainable path down to 2%. So that I would tell you is what that's really all about. It's not meant to send a signal. Neither of those is meant to send a further signal. And saying further progress, it becomes a test. We don't want to be. We don't think it's a good time to be doing a lot of forward guidance. There's a fair amount of uncertainty in that. In what I've said, the path that we're on, we do know where the destination is, but we don't know the right pace, and we don't know exactly where the destination is. So the point is to find the right pace and the right destination as we go. And I think there's a fair amount of uncertainty about that. And you don't want to tie yourself up with guidance. You want to be able to make sensible decisions as you go.
Steve Leisman, CNBC. Mr. Chairman, you talked about higher rates, perhaps from an expectation of higher growth. You didn't talk about it in terms of expectations of higher deficits. Is that something you think might be behind the recent rise in interest rates? And are rising deficits a concern to you?
So we don't comment on fiscal policy. And again, I don't have a lot more to say on what's driving bond yields. In terms of policy changes, though, let me give you a sense of how this works in the ordinary case. Let's say Congress is considering a rewrite of the tax laws. Doesn't matter what's in the content. So we would follow that. At a certain point, we'd think we see the outline. So we'd start to model it. And then we'd wait. And then at a certain point, the staff would brief the FOMC and say, these are the likely effects. There's lots and lots of literature on the effects of tax policy changes on various parts of the economy. So we try to get smart on that. And then the law actually passes. And, you'd start to put it, you probably run an alternative simulation before that happens, just to keep people trying to understand it. Then when it actually passes, it goes into the model along with a million other things. So, we have a very large economy. Many things are affecting it at any given time. And, a law change of some kind would go in there, but it would, it's a process that takes some time. Clearly, the legislative process takes a lot of time. And of course, the real question is not the effect of that law. It's all of the policy changes that are happening. What's the net effect? And, the overall effect on the economy at any given time. So I think that's a process that takes a lot of time. And that we go through all the time with every administration, constantly. And this will be no different. But right now there's nothing to model right now. It's such an early stage. We don't know what the policies are, and once we know what they are, we won't have a sense of when they'll be implemented or all those sorts of things. So I think I would just say we're not doing that now, and all that will take time, and it will be very much regular order when we do that.
If I could just follow up on Nick's question, are the current rates something you feel like you need to lean against in that they go against the direction of policy by adding restriction to the economy, or do you just take them as a given and perhaps a signal that you should do less?
I just think the first question is how long will they be sustained? If you remember the 5% 10-year, people were drawing massively important conclusions only to find, 3 weeks later the 10-year was 50 basis points lower. So, it's material changes in financial conditions that last, that are persistent, that really matter. And we don't know that about these. What we've seen so far, we're watching it, we're reading, we're doing the decompositions and reading others, but right now it's not a major factor in how we're thinking about things.
Chris.
Thank you, Chris Rugaber at Associated Press. You mentioned the positive economic data that we've seen since the September meeting, including the revisions to things like savings, higher GDP growth. We saw a stock market jump yesterday. That's renewed some of the questions about why do many cuts at all in this with this backdrop.
So you're right. As I mentioned, and as you mentioned, the latest economic data have been strong, and that's, of course, a great thing and highly welcome. But, of course, our mandate is maximum employment and price stability. And we think that even with today's cut, policy is still restrictive. We understand it's not possible to say precisely how restrictive, but we feel that it is still restrictive. And if you look at our goal variables, the labor market has cooled a great deal from its overheated state of 2 years ago and is now essentially in balance. It is continuing to cool, albeit at a modest rate. And we don't need further cooling, we don't think, to achieve our inflation mandate. So that's the labor market. Inflation has moved down a great deal from its highs of 2 years ago. And we judged, as I mentioned, that it's on a sustainable path back to 2%. So the job's not done on inflation. But if you look at those two things, we judged in September that it was appropriate to begin to recalibrate our policy stance to reflect this progress. And today's decision is really another step in that process. Overall, as I mentioned, we believe that with an appropriate recalibration of our policy stance, we can maintain strength in the labor market, even as our policy stance enables further progress toward our inflation goal.
Great. And just to follow up, what might cause you to pause rate cuts in December? What kind of economic data would lead you to that path? Thank you.
So we haven't made any decision like that at all. But we're in the process, as I mentioned, of moving policy down, our stance down over time to more neutral level. And as a general matter, as we move ahead, we are prepared to adjust our assessments of the appropriate pace and destination as the outlook evolves. So, for example, if we were to see the labor market deteriorating, we'd be prepared to move more quickly. Alternatively, as we approach levels that are plausibly neutral, or close to neutral, it may turn out to be appropriate to slow the pace at which we're dialing back restriction. Again, haven't made any decisions about that, but that's certainly a possibility. If you can think of it as similar to what we do with asset purchase, with asset runoff, with QT. So we reach a point where we slow the pace, much like an airplane reaching the airport slows down. And so we're thinking about it that way, but it's something that we're just beginning to think about.
Thanks, Chair Powell. So with the noise in the jobs reports that we've seen, and you look at the Fed's favorite inflation, PCE inflation, overall it's 2.1%, very close to the Fed's target, but core inflation is 2.7%, and it's been that way since July. So why doesn't this data give fuel to a rate pause for this meeting?
Well, so I think if you look at the 3 and 6 month, you're quoting the 12-month. So yes, we look at all of them, right? But yes, if you look at 3 and 6 month core PCE, you'll see they're around 2.3%. So we look at all of them, And we look at 12 as well. But what it's telling us is that we really have made significant progress, and we expect there to be bumps. For example, the last 3 months of last year, the core PCE readings were very, very low, probably unsustainably low. So that's why forecasts generally see a couple of upticks toward the end of the year. On the other hand, the January reading certainly looks like an example of residual seasonality, so that we saw last year. So when that falls out of the 12-month calculation in February, we should see a thing down. So it'll literally be a bump up and then down. We understand that. Overall, you see the progress on inflation, and you also look at the economy and you say, what is the inflation story now? Where's it coming from? So I point to a couple of things. One is the non-housing services and goods, which together make up 80% of the core PCE index, are back to the levels they were at the last time we had sustained 2% inflation, which happens to be in the early 2000s for a period of 5, 6, 7 years. So they're back to that level. What's not is housing services. So let's talk about housing services. Housing services is higher. What's going on there is, market rents, newly signed leases are experiencing very low inflation. And what's happening is older, leases that are turning over are taking several years to catch up to where market rent leases are. So that's just a catch-up problem. It's not really reflecting current inflationary pressures. It's reflecting past inflationary pressures. So that's one thing. The other thing is, I'd say look at the labor market, not a source of inflationary pressures. Where's it coming from? It's not a very tight economy. What is the story about inflation? You see that catch-up inflation also in insurance and several other areas. So you're seeing. We're not declaring victory, obviously, but we feel like the story is very consistent with inflation continuing to come down on a bumpy path over the next couple of years and settling around 2%. That story is intact, and it won't be one or two really good data months or bad data months aren't going to really change the pattern at this point now that we're this far into the process.
So you're quickly trying to get to that neutral rate that you see, or do you foresee that you have some time to get there?
Nothing in the economic data suggests that the committee has any need to be in a hurry to get there. We are seeing strong economic activity. We are seeing ongoing strength in the labor market. We're watching that carefully, but we do see maintaining strength there. And so we think that the right way to find neutral, if you will, is carefully, patiently. Again, that's not meant to have a specific meaning, other than to the extent the economy remains strong, we have the ability to take advantage of that as we try to navigate that middle path between the two risks.
Craig.
Hi, Chair Powell. Craig Torres from Bloomberg. 2 questions today. Did you learn anything about what Americans think about the economy from the election results? First question. Second question. I want to talk about some labor market indicators, and I do so with great respect for your attentiveness to the maximum employment side of the mandate, Chair Powell. So the unemployment rate has been at 4% or higher for 6 months. One of the broadest measures of unemployment is up about 0.5 point from a year ago. Compensation gains are sliding back. The quits rate, a signal of labor market dynamism, has been heading down to that bad neighborhood of the 20 teens. So you have put a marker at Jackson Hole saying any further cooling is unwelcome. It is cooling generally a little bit further. So at what point do we reach what you would describe as a shortfall from maximum employment? Thank you.
Sure. So on your first question, I'm not going to talk about anything that relates directly or indirectly to the election. On the second one, this is the great question, and it's the one we think about all the time. So I'll just say a couple things. There's nothing really surprising here. What we know is that the unemployment rate is low. We also know that it's moved up significantly from a year or so ago. So we've seen a big change upward in unemployment. Sometimes that has meant bad things. So far, it doesn't appear to be. It appears that I wouldn't say that the labor market has fully stabilized, because I do think it's continuing to very gradually cool. but it seems to be in a good place. And our policy, of course, is designed to keep it in that good place, to maintain the strength in the labor market while also enabling further progress on
还是没有任
inflation.
何东西。
You know, you mentioned a bunch of indicators, and you're right. You know, the openings to unemployment rate is back to a normal level. I would characterize it more broadly as normalizing. You mentioned wages. Wages are still running just a bit above where they would need to be consistent with 2% inflation, unless productivity is going to remain at this high level. If we see productivity, you know, more sustainably at these high levels, then that would sustain higher wage gains. So I would say, in fact, you can say it the other way, that wage increases are now consistent with 2% inflation given current productivity readings. But of course, the lore on productivity readings is whenever you see high readings, you should assume they're going to revert pretty quickly to the longer term trend. That has always been the case for 50 years. But, you know, it may be that we're now 5 years. If you look at the NIPA revisions that came out a month ago, we're 5 years into a nice set of productivity readings, which are sustained and very healthy. But overall, it's a good labor market. We can talk about 20 different data series. We'll be looking at all of them, of course. You know, we don't want the labor market to soften much from here. We don't think we need that to happen to get inflation back to 2%.
Victoria.
Hi, Victoria Guido with Politico. Some of the president-elect's advisors have suggested that you should resign. If he asked you to leave, would you go?
No.
Can you follow up on, do you think that legally you're not required to leave?
No.
有人说这个他来了以后会不会让他辞职？他会不会？
Michael McKee from Bloomberg Radio and Television. You talk a lot about what the data are telling you and how you are dependent on the data. But in terms of forward-looking assessments of the economy, what are you hearing from CEOs or other officials around the country? What did you hear today from the regional bank presidents about what companies and consumers think about where the economy is going from here rather than looking backwards? And does that match up with what your forecasts have been and what you think the appropriate policy path should be?
So it's hard to characterize a really interesting set of discussions we had, and of course you'll see them in the minutes in 3 weeks. But I would say this: I think the comments from our Reserve Bank colleagues and from the CEOs that they talk to are pretty constructive on the economy right now. Pretty constructive, feeling that the labor market is back to normal, to the point where it's no longer that much a discussion topic in their worlds. Whereas 2 years ago, it was all they were talking about. So they feel like the labor market's in balance. People feel good about where the economy is. Demand is obviously pretty strong, and you're seeing 2.8% growth in the third quarter estimated. Maybe the year's 2.5%. This is a strong economy. It's actually remarkable how well the U.S. economy has been performing with strong growth, a strong labor market, inflation coming down. We're really performing better than any of our global peers, and I think that is reflected in what you hear from. What I hear people hear from CEOs. I don't get to talk to a lot of CEOs in my job, but I hear what others summarize from those. And of course, I hear the Reserve Bank presidents do a lot of that. And it's pretty constructive overall. Now, that's not to say there are areas of caution and things like that, but ultimately, overall, pretty positive.
Well, to follow up the areas of caution, if there were black clouds on the horizon that you identified as something you're watching, what would they be?
I think it's things like clearly geopolitical risks around the world are elevated, and just as clearly they've had relatively little effect on the U.S. economy. Now, that can change through the price of oil or otherwise, but people talk about those as something that's on the horizon all the time. But ultimately, if you look at the U.S. economy, its performance has been very good, and that's what we hear from business people, and expectation that will continue. If anything, people feel next year, I've heard this from several people that next year could even be stronger than this year.
Andrew.
好了，我决定了，没啥好评的了，可能真的没啥好
Hi,
评的了。
it's Andrew Ackerman with the Washington Post. I just wanted to follow up on the discussion earlier on fiscal policy. Your predecessors, Greenspan and Volcker, spoke up loudly when they thought large budget deficits endangered economic or financial stability. Will you do that too? And right now we're in a period of full employment. We have large budget deficits and debt at historic highs that are rising. Is that something you'd speak out against?
So, I have said many times, no more, no less than what the predecessors you mentioned have said. And what that is that the U.S. federal government's fiscal policy is on an unsustainable path. The level of our debt relative to the economy is not unsustainable. The path is unsustainable. And we see that in, you've got a very large deficit you're at full employment, and that's expected to continue. So it's important that we, that to be dealt with. It is ultimately a threat to the economy. Now, I can say that. I don't have oversight. We don't have oversight over fiscal policy. I've said it on many occasions, just said it again.
Okay, thank you. I guess the other question is to follow up on Victoria's question. Do you believe the president has the power to fire or demote you, and has the Fed determined the legality of a president demoting at will any of the other governors with leadership positions?
Not permitted under the law.
Not what?
Not permitted under the law.
Thank you.
Courtney.
Courtney Brown from Axios. In response to Howard's question, you said it wasn't an ideal time to give forward guidance because of the economic uncertainties. Can you lay out what some of those uncertainties are and whether or not it includes some of the proposals that the president-elect has put out on the campaign trail? Tariffs, for instance?
No, I was not referring to the new administration's policies at all, nor will I today. So what I'm just saying is, as we look ahead, we know, and I mentioned this in my statement, that the risks are two-sided. I guess I should start by saying that we think that the economy and we think our policy are both in a very good place, And but as you look forward, you say, what are the risks? And one risk is that we would move too quickly and find ourselves having moved too quickly, and inflation comes back, and we lost our chance to get inflation back to 2%. So we have to avoid that risk, and that to avoid that risk, that means you want to move carefully. The other risk is that we move too slowly, and that we allow the labor market to weaken too much and do unnecessary damage to the labor market and to people's working lives. That says don't get behind the curve. So these two things are the two risks that we have to manage. And so we're in the middle there. We try to be in the middle and deal with manage both of those. Again, the idea is to support the strength we have in the labor market and in the economy, but also with somewhat less restrictive, but still restrictive policy, enable further progress toward our 2% inflation goal. So there's, this is a thing where we're meeting by meeting, we're going to be making our assessment of what the right path is. It's not as important. The precise timing of these things is not as important as the overall arc of them. And the arc of them is to move from where we are now to a sense of a more neutral policy. We don't know exactly where that is. We only know it by its works. We're pretty sure it's below where we are now. But as we move further, there will be more uncertainty about where that is, and we're going to move carefully as this goes on, so that we can increase the chances that we will get it right.
Simon.
Thank you, Chair Powell. Simon Rabinovich with The Economist. I know you don't want to share your decomposition of bond yields, but if you look at the break-evens, it is clear that longer-term inflation expectations do seem to have risen up at about 2.5%, for example, on the 5-year. That's up half a point from when you cut in September. Do you have any concern at all that longer-term inflation expectations are de-anchoring, or put another way, are anchoring at a slightly higher level? Thanks.
So we would be concerned if we thought we saw longer-term inflation expectations anchoring at a higher level. That's not what we're seeing. We're still seeing between surveys and market readings broadly consistent with, I looked at the five-year earlier today, and it's probably moved, but it's just not, it's kind of right where it's been. And also it's pretty close to consistent with 2% PCE inflation. So that's one that's been a traditional one that we look at a lot. But overall, expectations seem to be, and really have throughout this, in a place that's consistent with 2% inflation. But you're right to say we watch that very carefully, and we will not allow inflation expectations to drift upward. But that's really why we reacted so sharply back in 2022 was to avoid that.
Kelly.
Hi, Chair Powell. Kelly O'Grady, CBS News. We just talked about what you've heard from business leaders on the economy, but many average Americans are still not feeling the strength of the economy in their wallets. So what's your message to them on when they might expect relief?
So you're right that we say the economy is performing well, and it is, but we also know that people